Retail inflation showed signs of cooling off in November, led by easing prices of some of the food items. Let's do a three-point analysis to find out if this will prompt the RBI to look at slashing interest rates. 1. CPI inflation at a 3-month low. Well, retail inflation stood at 6.93% in the month of November 2020. Now, inflation cooled off from 7.61% in October, and that's according to the data released by the Ministry of Statistics and Program Implementation, or MOSPI as it is called, yesterday. Remember, the rise in prices in October had been the sharpest rise seen since May of 2014, that is a 6-year high on the back of the rise in food prices. However, in the month of November, the consumer food price index has eased to 9.43% during the month under this review versus an 11.07% back in October. Vegetable prices index also softened to 15.6% in the month of November. Also, the drop in pulses inflation aided the relief in the headline number this time around. 2. Why is there divergence between CPI and WPI inflation? Well, while the retail inflation fell to a 3-month low, the wholesale prices in November climbed to their highest level since February, rising 1.55% from 1.48% in the previous month. Now, this was largely due to the costlier manufactured items. Now, the divergence between the food component of the wholesale and retail inflation also rose to a 5-month high of 5.5% in the month of November. Now, the divergence between the wholesale and the retail prices points to the supply side bottlenecks and large margins being charged to the consumer. Also, the core inflation, which is the price rise in non-food, non-fuel segments, rose to the highest in nearly 2 years at 5.51% in November as against 5.46% in October. 3. Will lower CPI inflation prompt the RBI to cut rates? Well, Aditi Nair, principal economist at ICRA Ratings, has said that while the low retail inflation definitely provides a welcome relief, it is unlikely to provide or prove adequate for any imminent rate easing. Now, most of the experts have also echoed the same opinion, saying that the central bank is unlikely to cut interest rates anytime soon, as inflation still remains well above the upper limit of the RBI's tolerance level of 6%. Now, the RBI Governor Shaktikanta Das, in its MPC meet on December 4th, had pegged the CPI inflation to be at 6.8% during the October to December quarter, adding that it is likely to really come down to 5.8% in Q4 of FY20. Now, noted economists have also said that while the pressures on food prices appear to be reversing, several factors such as higher operational and labor costs, also the rising energy costs, will likely prevent a large drop in inflation over the next 3 to 6 months. Also, some economists say that a sticky core inflation and the COVID-related inflation will definitely keep the headline inflation quite elevated. Therefore, we do believe that we are in for a long pause on policy rates.